Hello traders, welcome to another daily analysis for the day of February 20th. So today, Monday, was a US holiday. Well, first thing first, we are right at 12:30 Tuesday right now, February 21st. So we're about an hour and a half into a London session. And just to recap what happened today, as I mentioned, was a US and Canada holiday. So the liquidity was very thin. On top of that, it was a usual Monday, so there wasn't really any tier 1 data coming out from the market. The only thing was the Asian session, the very recent one, where we had the RBA minute. And it just basically, this wasn't too much insight, but basically you do see that the central banks are still very confident and consistent about their currencies. They still think it's the next GDP release data is going to be way much better than the previous one. And I do think that's probably going to be the case. Although if we might have some upset movement, then we will see Australian dollar being largely sold off. But I do think the next GDP data will be better than the previous one. First of all, it's because the previous one was very negative already. And judging by what happened to the trade balance, the previous trade balance was very, very positive. The commodity price is still keep aging higher, and the export is doing well for iron ore. So really putting together, it really not too hard to predict that the next GDP of Australia will be much better. And that's what central bank is betting on, and that's what they basically justify the reason why they're going to not cutting rate further. So if that's the case, then we are going to see Australian dollar continue this upside momentum. A lot of people always like to maybe question or ask, whether a certain currency is overbought or oversold. Now the truth is that, as I keep mentioning, that the market can always stay irrational for a very long period of time. So it's not wise, at least for me, to put this kind of fundamental data or maybe your own personal belief saying that it's too high or too low. And for me, I always let the market tells me, or that the trend tells me, because I don't like to give this kind of prediction saying that, okay, we're at the top or we're at the bottom, because the truth is nobody knows. So we just go with the flow, where the money flow is. So right now, the central bank is very important, very upbeat for the Australian dollar. So that's what I'm going to ride the trend, unless the picture has changed. Otherwise, I am gonna ride on the current trend. So that's pretty much the only tier 1 data. And the French election, this downward pressure continue because Le Pen continue taking lead in the poll, and today the gap between her and the other candidate even narrows. So right now you already saw a lot of reaction on this. Then by first thing is that people are going to dump out the French bond. And why is that? Because thinking about bond is like, you buying the bond, especially the treasury bond, is because you want to invest in a country. And if you don't have any confidence for the country's future, of course, you're going to sell that bond. And that's what happened in France right now. A lot of traders or investors are start dumping the French bond. And that's why we saw a high yield coming up in France. So that's very significant because it's basically a chainsaw reaction. And that just show you that people are starting to believe that there is a possibility Le Pen might really win, not only the first round, but maybe the second round. So that, of course, create a lot of downward pressure, not only for France, but only for the whole Eurozone, and particularly for the Euro. So Euro is still very, very negative on our analysis. And we still, same thing, have a German official continue to complain about the low currency of Euro. But as I mentioned, I don't think ECB is going to do anything prior to the French election. Other than that, the UK House of Lords started a 2-day debate on the Brexit bill. Now, this might be positive for British pound. The reason is because right now, as I mentioned, it goes to the parliament. The parliament, a member of parliament has a lot of power to ask the government or Theresa May to be more transparent when dealing with European nations. So if that's the case, then of course that's going to calm the market down a lot more than letting the government to deal with the whole negotiation alone. So now is the time for the Member of Parliament to introduce a lot of new bill in terms of how they are going to negotiate with the euro. So if that's the case, that's going to be inject some sort of a positive sentiment into British pound. But you gotta look at the fundamental side of the British pound. Last week, the retail sale was a large negative number. It just shows you that right now the depreciation of sterling has slowly affected the economy. And if that thing continues, as I mentioned, then UK might has the possibility to go into this technical recessions. So really depend on how you trade your trade, how you hold your trade, what's your time frame. If you're looking at a fundamental perspective in a more longer term, of course, British pound is still looking to the downside. But if you're looking at in the intraday perspective, then this parliamentary debate might give some sort of positive sentiment into British pound, especially if you pair it up with a negative currency such as euro, Japanese yen, or Swiss franc. So that's pretty much it for now. Now, our analysis for each currency are pretty much still the same from our weekly outlook, because there wasn't any new updates basically. And tomorrow is going to be another light economic calendar. Really don't have any tier 1 data besides the GDP price from New Zealand, and the RBA government law is going to speak again. But that's all really later in the Asian session. So again, it's going to be a light economic week and going to be a light economic day. So let's take a look at our current trade. So today I did not really trade anything because there's just simply nothing to trade. The current trade we have, just give me 1 second. Let me go to my journal. Okay, so we're at the daily chart. First thing first is our dollar trade. So our dollar yen trade is, again, last week we have this consecutive of down day. But as I keep mentioning to you, it is that every trade, you have a lot of way to manage it. In this kind of downward movement, of course, if people are more in the intraday short-term perspective, the sell dollar, you can definitely profit. For me, it's really depending on why you enter the trade, what's the approach, and can you be consistent with that approach. So I did not get out or even get scared at all with this downward movement, because I know that I got in the trade first place because the fundamental strength, and that's what I'm going to keep holding in. And right now, of course, as you can see, we are continue going back, and looks like it's just a temporary. It looks like this is a low, and now we might really start turning the trend to a higher high, higher low. But the thing is, of course, we don't know the future. So the only thing you can be certain is only that you have to be consistent with your approach. Because the last thing you want is get in the trade maybe with technical analysis and get out because the fundamental news, or vice versa. Maybe you get into a trade with technical analysis and get out of trade, or get in a trade with fundamental analysis and get out of trade because the technical has changed. So the key is really just to stay more consistent with your approach. So that's the first dollar trade we have. Dollar Swiss, you can tell it's exactly the same picture. We got a little bit. It looks like we are finding some sort of support here. And now it looks like maybe this is the establish of a higher low, but we don't know that, so we have to see. But for me, the fundamental bias is still very clear, so I'm not looking to really do anything about it. Now our CAD yen trade, it's exactly the same thing. You have this double bottom, and you do have a bit pullback. As I mentioned, it's very, very logic because you are having this resistance here. Now we are going to test again at 87.50, and if we breaks above, then of course these things are going to keep going up. Now for Canadian dollar, it's a very positive currency fundamentally speaking. Now the reason is because we have continuation of higher oil price and a positive news. Right now, not only the OPEC, compliance has been very positive. We also have a lot of reports from the hedge fund traders that a large position build up into the oil market. So really people will start to price in, as I mentioned, in this February and March, and really looking for a more long-term perspective. Especially when you have a large money like hedge fund, they don't really move their position too easily. So if they are pricing in right now, it means they have a sort of certainty for oil price to go to a certain level. And as I mentioned, $60 per barrel, it's very, very likely to reach. Now, if that's the case, then the Canadian dollar is going to be benefited at least for a short term. So that's why CAD is still looking very well, fundamentally speaking. The other trade we have is Pound Aussie. Now, Pound Aussie is probably the only trade that I am probably less confident about it. Now, the reason is because I know that British pound still have this short-term momentum to the upside from the Brexit bill. Australian dollar, on the other hand, as I mentioned, I know the next core GDP has a high chance to be positive, but I don't know it yet. Right? We don't have any fundamental data to support the optimism of RBA. So right now, Australian dollar has been supported by a higher commodity price, especially the iron ore, has been supported by the growing of Chinese economy. It has been supported by the central bank. But all these are more in a sentimental base, because the real fundamental data that coming out from Australia previously, the labor market, inflation, and GDP, had all been quite negative. So this is where you have this divergence. So unless we can see really a sort of a good piece of data to support it, and I know we have this positive trade balance previously, but it's not really the three major data that the so-called the three most important, labor, inflation, and GDP. So I'm really hoping next week the GDP data can at least give us some positive number to basically justify the bullish sentiment of the Australian dollar. If that's the case, then I'm gonna be more comfortable for all the Australian dollar trade. Otherwise, I am still kind of unsure of the strength into Australian, especially when versus British pound, which I know it is still also a high yield currency. So that's the thing I'm not sure about it, and I'm still holding it. I do really want to maybe move it to break even in this trade, but I will see what's about to happen. But just to give you a heads up, I'm really looking forward to maybe moving stop loss to break even, particularly for pound trade right now. The other Australian dollar trade, Euro Aussie short, this I'm more certain is because I'm more certain about the bearish momentum into the euro. So this I will be more certain. Even if I have a very negative outcome for Australian dollar, it's still gonna be a much stronger currency comparing to euro. Now Aussie Swiss and Aussie Yen is exactly the same thing. That I'm more certain it's because the fundamental bias is very obvious in terms of Swiss franc, Japanese yen, and euro dollar. So that's why I'm more confident in holding these three trade. Where if in a pound Aussie, because the yield is not that much differences, and British pound has an equal amount of buyer who wants to maybe pump the price up, and there is again equal amount of a real entrepreneur and companies who wants to actually invest in UK to take advantage of this low sterling. So there is some fundamental strength into the sterling. So that's something I am a little bit worried about holding the pound Aussie trade. And that's why this is really most likely the trade I might just move to break even to prevent any nasty, sudden change. So that's pretty much the trade I have in the daily perspective. I am still holding my Aussie dollar intraday trade to a short, and it does look much better right now because if you draw just a very simple, like a trend line, it does look like we're making a lower high and lower high, and 77 has been holding up pretty well. So we still didn't really go anywhere too meaningful, really just trading inside this range, and I'm still in the drawdown. But right now I'm more confident to hold it maybe to the downside. It's really depend on really honestly I think it's gonna go to a range bound, because I don't think anybody who is going to buy Australian dollar right now. People will probably want to wait after the GDP data next week. I don't think too much people are wanting to buy US dollar right now either, because people probably want to wait to see what's that tax reform plan by Donald Trump, and dollar still suffer this negative sentiment for sure, right? That's one thing you have to take into consideration. So that's why I do think Aussie dollar, because the fundamental bias is not that huge, so maybe we are going to drag it out in the range bound area. But it's definitely like Australian dollar did lose some momentum, so that's why I'm still in this trade, because fundamentally I'm still leaning a bit more bullish into a US dollar. So that's pretty much all the current trade I have. And let's take a look at our major currency pairs. So Euro pound, today you have this kind of bearish, sort of engulfing. Now it's not really something I was sure of buy in this currency, because they both are quite, negative for me. Same as Euro Swiss. Euro dollar, definitely the one I'm looking to sell, and unfortunately we don't have any signal at 1.07. We couldn't even reach it, right? So that's what I'm trying to say, that even if we have this kind of reversal signal, if it goes against the fundamental, then you can still trade it, but you definitely don't want to hold it for too long, because you will only have like this, two green candle day, then it will revert back to the fundamental strength, which is more favor for US dollar. So that means Euro dollar is still looking to the downside movement. Euro Aussie is the one we are in right now. Euro CAD, I'm looking to short in this trade. Still don't have a signal yet. Euro New Zealand, I'm also looking to short. This is actually a quite nice inside candle, but I don't want to do anything. I want one solid bearish candle for me to get into it, if we can have it around 1.4850. The reason is because New Zealand dollar still hasn't recovered completely from the previous negative sentiment. So maybe we'll wait for a bit. Today we have the GDT price. That could be a nice catalyst to boost New Zealand dollar up, or maybe to pressure it even downside. So we'll have to see. Euro yen, again, not something I will touch, because they both are very negative currency for me. British pound, again, the only thing I'm looking at, maybe I'm shorting cable. And I do have a pending order at 1.25. And the reason is I don't have any signal, I know that, but the very simple reason is just this is a nice psychological handle. So I put a pending order here. My stop loss is way above 1.2750. Now for me, this is a very swing trade perspective. If I get in later, then I will most likely hold it until we going back to 1.21. And that might be a long time, but I don't really care, just because the fundamental bias is very large for cable. Pound Aussie is the one we're currently in, and I'm most likely going to move it to break even. Pound CAD is the one I'm looking to short. I don't have any signal at here. Of course, the best level will be at 1.65. Pound New Zealand, I'm also looking to short, and this is a nice area at 1.75, but we'll have to see if we have any signal there. Pound Yen, not something I will touch right now. Swiss franc Japanese yen, also not something I will touch. And dollar Swiss, it's the one we are in. And dollar yen is also the one we are in. And dollar CAD. Now, dollar CAD is also not something I will touch just because they both are quite strong currency right now. I do think Canadian dollar has a better momentum, but since daily chart is more like a fundamental trade, so I'm not going to take a trade that I don't have any fundamental bias. Aussie Swiss is the one we are in. Aussie Yen is also the one we are in right now. Aussie dollar, we are in this one in the short intraday perspective. Now Aussie CAD and Aussie Newsy, it's not something I will touch, particularly in the daily perspective. Now Aussie Newsy continue to edge higher. I do have an intraday pending order, but I don't really think we're gonna go down there anytime soon. So let's take a look at Cash Swiss. Cash Swiss and CAD Yang, again, both looking to long. CAD Yang is the one I'm in. Now New Zealand Swiss, I'm also looking to long here. New Zealand dollar, not looking to touch. New Zealand CAD, I'm also not looking to do anything. And New Zealand Yen, I'm looking to buy. Now, this was a nice signal for me today, but it's not really a kangaroo tail, so I don't take it. But this is definitely a very good area, a good area of support. So what I'll do is I go to intraday trade and maybe see if I have a daily intraday signal to buy New Zealand Yen. So whatever technical strategy you want to use, it's up to you. But just looking at a bigger picture perspective, I do think New Zealand Yen will be a good area to buy. You are right at 81 support area, and if you zoom out, it is still looking to the upside. We are in this range bound, of course, area, but it does look looking up to the upside. So that's pretty much it. I do have a member ask me a question today, so let me answer it as best as I can. There was a question. So people ask me about the currency strength, and I know a lot of indicators have that kind of currency strength. The thing you have to understand about the currency market is that it's not a central market, so it's an over-the-counter market. That means whatever currency strength indicator that you use is only from that brokerage. So that means that doesn't have too much meaning in terms of the overall market. It's different than looking at a stock market where you have a centralized, for example, New York Stock Exchange, you have a NASDAQ. So when you have this kind of strength, currencies, stock strength, it's easier to get a better picture. So I do know a lot of brokerage offer this kind of indicator, but that strength only measure within the brokerage, and most brokerage are for retail traders, and those retail traders are very, very small component. I know people say 90% of currency market is speculation. That's true, but the volume is not created by retail traders because the money is simply too small. So what I do on the contrary is I look at the futures market. So if you want to know where the currency strength is, it's better to look at the CFTC market because that's a more centralized location. And that's basically why I say that I'm more bullish in Canadian dollar, because I have a large futures position to build up. So same thing, you can trade currency in the spot market, or you can trade in the futures market. Now, a lot of commercial trader will trade the futures market. A lot of hedge fund trader will trade the futures market. And those are more transparent and more centralized. So what you can do is go to CFTC, looking at the futures position. It releases every week. And for me, that's how I use that to maybe take a look at the currency strength. And those are pretty good. The good website I use is COT Base. So if you go to COT Base, there is a commitment of trader, and it's it's free. You can join where it charge you like $8-9 a month. You have a better analysis. But basically, you just go down here and look at the COT net position. You have a commercial trader, large speculator, and small speculator. And what you want to see is to look at, for me personally, I look at the large speculator to see whether the position has been built up or to go down. So for me, I don't really look at a particular number. We just want to look at the extreme area. So this is what you want to see is the extreme area. When you have this kind of extreme divergence between maybe the large speculator or commercial trader, or if you have this kind of, you see the blue color is the small speculator, and generally what you want to do is use a small speculator as an opposite indicator. Means that when small speculators are buying, that's the moment a price and a pair should crash. On the contrary, when they are selling, it's the moment you can buy. And the reason is because 90% of traders lose money, 90% of the small speculator lose money. So you use that as an opposite indicator. So if you're looking at like here, this, look at the blue line, you see that's a continuation of downside movement for Australian dollar. Right here at the bottom is really where the price, it's bottom up and gonna pick up slowly. So that's basically what I do. Same thing as Canadian dollar. You can just use this, COTbase.com, and just look out for something that's more like an extreme area, or when you have something to build up, position that build up. Like here, you have a green large speculator goes from here to slowly build up. It's where it's going to reflect in the price action. So that's something I do in terms of the currency strength. Otherwise, I don't really pay too much attention to those currency strength indicators. And people also ask me, how do I use moving average to help me for a swing trade? Basically, moving average is very handy for me to look at the general directions. So I don't really trade, I don't use that as an indicator to signal for me to enter a trade. But I use that as an overall trending directions. Because it's very flexible. Let's say we are in the New Zealand. If you look at this 200 moving average, then whenever it cross over that moving average, it's a very significant momentum switch. And if you have a fundamental reason to accompany that, then that would be a very, very good way. Let's take a look at dollar yen. See, dollar yen prior to November last year, it's still in a downtrend. And how do I know that? It's just look at the moving average. Looking at how the candlesticks still trade below the 200-day moving average. And after November 14, you have this first candle to really close above the moving average. And that alone does not give me anything at all. But when I look at the market, I realize what happened in November is Donald Trump gets elected and the stock market react very positively. Global market actually react very positively for his election. And Federal Reserve also signal a rate hike in December. So a lot of people are pricing. So after that, then that's a pretty good signal to know that if you are swing trade, you only want to take a dollar yen long trade. That does not mean you're not going to have this kind of downward movement, but it just means that it's looking in a micro picture perspective, looking to the upside. So basically that's how I use the moving average. Really nothing too spatial. You can use something else, if in an hourly perspective, you can use 2,500, 200 moving average, and just basically give you a guideline. So I know I don't really trade, for example, this kind of cross. I don't use it to establish any position at all. For me, it's just use the moving average to give me a better picture of where the price is going. And people ask me if I can cover gold, silver. The reason I don't do gold and silver, very simple reason, is because I don't have those in my brokerage. So that's really the only reason. I do take a look at gold, silver, and oil market. Now what I do is I don't really take a look at chart. I just go to the news space to look at what happened to the WTI, what happened to the Brent crude oil. But if you want, yeah, certainly I can do it. What I do is use free trading view. Trading view is just a free charting software that you can use. See if I can get something here. So yeah, it's very simple charting. So what I do is I generally use this to take a look at WTI. And for me, again, I don't really trade this one, so I just look at the oil market, commodity market as a correlation basically. And when a re-sentiment is positive, when people are confident about the global market, of course you're going to see more demand into the oil market, where it's going to see a higher high for the oil price. This is for WTI, and as I mentioned, because the oil is different, you can also look at Brent crude oil as just to give you a more like a congruent picture. And you can also look at gold. Now, when you look at gold, it's really the same thing as if you look at dollar yen, because people buy gold when the risk is high, right? They want to put their money in the safe haven. And safe haven is really gold price, it's really Japanese yen, it's really Swiss franc. So, whenever gold price is going down, dollar yen is going to go up. So that's really basically how I don't really trade gold, but that's how I use the interbank market to get a better picture of what happened. So if you look at gold and dollar, of course, you do have this higher high movement, very very easy to see, right? You got higher high ever since maybe the beginning of this year. So it's still looking to the upside movement. If you zoom out, of course, 1250, psychological handle will be a strong resistant area. And you have this short term, looks like you have a double bottom or a double top right here. But I don't trade gold as a technically speaking, but just use that as a sort of a guideline. Silver, what is a silver ticker? It's XAG. Okay, so silver is a different story than gold, because silver has less of this kind of risk safe haven status. Now silver has an actual demand, so it's a little bit different fundamentally speaking when you trade silver, because unlike gold really has no actual value in terms of production or manufacturing. The gold is really exists, especially nowadays, for a simple purpose as hedging, as people to holding gold when things go wrong. Silver, on the other hand, has an actual demand for manufacturing. For a lot of products like cell phone, like manufacturing, like car, like automobile, you do need silver. You even need silver for your dental. So silver does have that demand. So that's why it's not really something I look at too often, because I don't know what's the correlation between that. But gold, on the other hand, definitely I do look at. I just don't look at the chart. I look at, I read the news to see where the gold price is. Same thing as a bond yield. So what you want to see is to see a very clear correlation. If the U.S. bond yield is going up, that means people are selling bonds, right? Because bond price and yield has an inverse relationship. So the bond yield goes up means the bond price drop. The bond price drop means that people are not buying bond. People are not buying bond because they are looking for some more risky investment, because people feel more confident about the global market. So most likely you're going to see equity market price goes up. You're going to see a gold price go down. You're also going to see a safe haven currency, Japanese yen, Swiss franc, all goes down. So that's basically what you want to see, this kind of correlation picture. Now, of course, it doesn't happen all the time. Sometimes you have, gold price shoots up, but Japanese yen drop. And those are the time that you want to be more cautious to see exactly why the price is like that. So that's pretty much it for gold. But gold, another thing about gold is a lot of people are particularly only trading gold. So that means looking at the gold price sometimes will give you a sort of prediction of what's about to happen. So that means gold is easier to reach a bottom and top prior to any other currency pair. So a lot of people do use gold, especially to look out for the interest rate. So if people think the interest rate of US dollar is gonna go up, then they are not going to buy gold. And that's where you can basically see how traders are pricing. But you can also see that basically in the futures market. So I hope that answered your question. But basically that's how I use gold and oil to look at the sort of the micro perspective. And in terms of moving average, I also use that to look at a micro perspective. And in terms of currency strengths, I look at the futures market because it's a more centralized market, centralized location to give us a more clear picture of the current strength and weakness of currency. Okay, so hope that answered your question. Let me know if you have any more question you need to ask. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching. Bye bye.